Hello and welcome to Platinum Investments. Today we are going to discuss about something different apart from stock market, though it has a direct implication on Indian stock market. It is the Russia-Ukraine conflict, or I would call an invasion, a one-sided invasion, which the world has witnessed currently. So today we are going to discuss the sanctions that the West and the US has put on Russia, and whether Mr. Putin, the president of Russia, is actually worried about these sanctions, and if at all, what are the outcomes and the consequences of these sanctions could possibly be on world market and Indian stock market. So in spite of all these existing sanctions which has been prevailing for last 28 years, Mr. Putin has taken the risk of invading Ukraine. These sanctions, I don't believe the president of Russia has been too much worried about, because he has been living with these sanctions for the last 2 decades or even more. Currently, we have witnessed the central bank of the Europe and the United Kingdom has announced sanctions on 5 major banks on Russia, which are the Bank of Russia, the Black Sea Bank, the Yen Bank, the IS Bank, and the Prometheus Bank. Now, out of all these, this Prometheus Bank is of utmost importance because it engages and involves in financing and lending for Russian military budget and defense budget, for procurement of defense and military equipments and ammunitions. So all these bans will have an implication on Russian economy. Other than these prominent banks, US has also imposed sanctions on prominent oil manufacturing companies and gas manufacturing companies of Russia, and other PSU giants of Russia have been involved in manufacturing arms and ammunitions and other products. But the data suggests that from the Bank of International, which is the BIS, it shows that the European lenders holds a whopping share of nearly $30 billion in foreign banks' exposure to Russia. So, knowing these facts, I don't think in the back of the mind the president of Russia would actually worry about much about the Europe and European sanctions and their prolonged exposure to Russian economy. The Russia is very different from other countries, like the countries which have faced the sanction from US, like the Venezuela, the Iran and the North Korea. Unlike them, Russian economy is multipolar and not unipolar. For instance, they are not dependent on any particular one thing. Russian economy is vibrant enough. They have their the sources in gas, in oil, and weapons manufacturing. India for decades have been using Russian arms and ammunitions, the aircrafts and the tanks and all. Russia also has its more than footprints in IT sector. The famous Telegram channel that we use is of Russian background, and also Russia has its prominence in agriculture sector as well. Now, talking about the gas pipeline linking throughout the Europe is also a very important and essential point to look out for. Now, the entire European country, including giants like Germany and Italy and Finland and so on, are directly and heavily dependent on the gas supply of Russia. Now, all these European countries faces harsh winter, and the only means of survival is heating in their residences and offices and everywhere, which is been supplied by the gas that Russia provides. So I don't think Europe gonna allow any kind of disruption in this supply chain provided by Russia. Now, in 2014-2015, Russia has its share of lesson while its Crimea invasion and the sanction that brought down the negative consequences on their economy. So post 2014, Russia has always tried as they have decided to flush out dollar from their economy, and because of that, Russia has become much more self-reliant and Atmanirbhar, as we said. So only 16% of the foreign exchange reserve is dollar in today's date, and rest 13% is Chinese economy, Chinese currency, which also shows the lesser dependency on dollar. It's a pre-planned venture by Russia, as they have been planning for this invasion long back. Now, looking at the trade surplus figure, the trade surplus data, we have often heard about trade deficit, but Russia is actually sitting on trade surplus, which means more export and less import. And in last 2 years, this figure has diminished significantly. I mean, the exports have risen significantly more and imports have come down hugely. And $27 billion excess trade surplus has been created in last 2 years. Now, Russia's current foreign exchange reserve is sitting at a whopping $640 billion, as equal to Indian foreign reserves. Russia's gold share in foreign exchange reserve has also risen exponentially in last 2 years. And with this excess of foreign exchange reserve, Russia is all set and prepared to buy back ruble, which is their currency, to buy them back at the lower levels, and further ensuring a stability in Russian economy. The Russian bank's foreign asset stands at $200 billion, while the foreign liability stands only at $143. Russia in today's date has a grand plan and a grand alliance in their making, with a collaboration of India and China, and also looking at a alternate for swift payment services. They have been working hard and have been making roadways for it. So, cutting down of budget expenses and other prominent expenses clearly shows that the Russian economy is focusing more on stability than growth. Talking by and large on these factors, I don't think Russia would be very much worried about these sanctions that have been imposed on them. They have their plans sorted out, and I mean, Russia once been a superpower. They have their plan of actions. They know what they're doing. They know what the possible consequences can be. They are moving east than west. They are thinking east. They are thinking about a grand collaboration, a grand alliance in east, and this could be a very good and positive signal for India and India's economy and India's GDP and overall India's prospects. So, Indian stock market is no different from Indian economy. So, therefore, we can see uprising in long term or in even possible short term as well. In 1 year, 2 years time, we can see our market can easily rise another 30-40% from the current levels. However, in immediate short term, the kind of precedents which Russia has laid down, the invasion, I mean, other neighboring countries like China aiming for Taiwan and similar other ventures cannot be ruled out. In similar situation, my market can react adversely and can go down and show you lower levels of like Nifty. If you won't be surprised, we get to see around 15,000 levels. However, our immediate target has been achieved. We are currently holding no positions, and we are advising people to sit back and relax, keep your capital idle, and wait for again an ultimate opportunity to buy. That's it for then. Thank you for watching this video. Please like, share and subscribe. Thank you so much.